In a stunning turn of events, over $1 billion flooded into Ethereum ETFs in a single day, marking the largest institutional inflow in crypto history. What does this mean for the future of cryptocurrencies, particularly Bitcoin and Ethereum? Looking ahead, several scenarios could unfold in the cryptocurrency market. First, sustained inflows into Ethereum ETFs could propel the price of ETH toward the range of $3,500 to $4,000, particularly if Bitcoin stabilizes above $120,000. This potential price surge is rooted in the increasing institutional interest in Ethereum, which has been gaining traction as a preferred asset among investors. Moreover, the potential for an altcoin rally remains strong, with Solana, XRP, and Dogecoin likely to benefit from ongoing capital rotation as traders seek new opportunities. Regulatory momentum is building, especially with the possibility of passing the Clarity Act, which aims to establish clearer rules for stablecoins and decentralized finance, DeFi. Such clarity could facilitate even more ETF inflows, attracting a broader range of investors. The impact of these developments could be profound. As more regulatory frameworks emerge, the cryptocurrency market may see a shift towards greater legitimacy, encouraging traditional financial institutions to engage more deeply with digital assets. This could lead to an influx of capital, further driving prices upward. Additionally, as corporate adoption grows, more companies might follow the lead of ETHZilla, rebranding their treasury strategies to include Ethereum for yield generation rather than mere speculation. This strategic shift could solidify Ethereum's position as the institutional favorite, potentially reshaping the competitive landscape of cryptocurrencies. As Ethereum cements its dominance, questions arise regarding Bitcoin's future. Will it maintain its status as the original cryptocurrency, or will it be overshadowed by Ethereum's expanding use cases? The next few months will be crucial in determining whether Bitcoin can establish itself as a resilient asset amidst Ethereum's ascent. Investors will be closely monitoring these trends, as the outcomes will shape the future of the cryptocurrency landscape. The shift towards Ethereum has been years in the making, marked by a significant evolution from a niche platform for decentralized applications to the backbone of the burgeoning DeFi and NFT sectors. This transformation accelerated following the bear market of 2022 and 2023, during which institutional confidence in Ethereum began to rebuild. A pivotal moment came with the successful approval of Ethereum-based exchange-traded funds, ETFs, in mid-2024, which provided regulated exposure to a broader range of investors looking to diversify their portfolios. In addition to this regulatory breakthrough, the introduction of Layer 2 scaling solutions, such as Arbitrum and Optimism, has enhanced Ethereum's efficiency, making it a more attractive option through reduced fees and faster transaction speeds. These innovations have revitalized interest among developers and investors alike. Corporate treasury strategies have also shifted, with companies like MicroStrategy continuing to focus on Bitcoin, while others explore Ethereum for potential yield generation and diversification. The recent influx of capital into Ethereum is believed to be fueled by a climate of positive regulatory clarity, particularly during the ongoing Crypto Week debates in Congress surrounding the Clarity Act. This legislation aims to provide clearer guidelines for cryptocurrency regulation, fostering a more stable environment for investment. The impact of these developments is profound, as they not only bolster Ethereum's position in the market, but also signal a maturation of the crypto landscape overall. Looking forward, as regulatory frameworks become more defined and institutional interest continues to grow, Ethereum is poised to further solidify its role as a cornerstone of the digital asset ecosystem. The next few months will be critical in determining how effectively Ethereum can leverage these advancements to attract even more significant investment and innovation. This landmark inflow into Ethereum represents a pivotal moment in the cryptocurrency landscape, underscoring a notable shift in institutional investment strategies. Recent reports indicate that institutional investors are increasingly favoring Ethereum over Bitcoin, marking a significant departure from historical trends where Bitcoin reigned supreme as the primary digital asset. This transition can be attributed to Ethereum's unique advantages, particularly its advanced smart contract capabilities, which enable a wide range of decentralized applications and services. Furthermore, the robust ecosystem of decentralized finance, or DeFi, built on Ethereum, has attracted considerable attention as it offers opportunities for yield generation that align with the evolving priorities of institutional portfolios. The growing demand for Ethereum is also fueled by anticipated scalability upgrades, which promise to enhance transaction speeds and reduce costs. These improvements are critical as Ethereum continues to compete with other blockchain platforms, aiming to solidify its position as the leading smart contract platform. As institutional investors increasingly seek yield and utility in their cryptocurrency investments, Ethereum's multifaceted offerings are capturing interest in ways that Bitcoin's more limited functionality cannot. The implications of this shift are profound. For retail investors, the trend suggests that Ethereum may outperform Bitcoin in the near term, potentially leading to a reallocation of capital within the cryptocurrency market. This could catalyze a broader momentum in altcoins as investors diversify their holdings and explore the vast array of assets beyond Bitcoin. Additionally, the liquidity introduced by exchange-traded funds, or ETFs, is becoming a dominant force in the market. This influx of institutional capital is expected to stabilize price fluctuations, reducing the volatility that has historically plagued retail trading. As we look ahead, the landscape of cryptocurrency investment may continue to evolve dramatically. If this trend persists, Ethereum could solidify its status as a cornerstone of institutional investment portfolios. The continued influx of capital into Ethereum and its related assets may not only enhance market liquidity, but also foster innovation across the blockchain space. Ultimately, the trajectory of Ethereum will serve as a crucial barometer for the future of cryptocurrencies, with potential ramifications for both institutional and retail investors alike. On Monday, July 6, 2026, over $1 billion in fresh capital surged into U.S.-listed Ethereum ETFs. This unprecedented influx shattered previous records for single-day investments in crypto ETFs. This surge is emblematic of a growing trend, as institutional investors increasingly view Ethereum as a viable alternative to Bitcoin. At the same time, Bitcoin experienced a brief spike, reaching $122,800, a significant milestone for the leading cryptocurrency. Other cryptocurrencies, such as Solana and Dogecoin, also enjoyed notable gains, with increases of 9% and 8% respectively. As a result, the total cryptocurrency market cap rose by 2.8% to a staggering $4.13 trillion. The Fear and Greed Index, which measures market sentiment, jumped from neutral territory to 63, indicating increased investor enthusiasm. This shift in sentiment is critical, as it reflects a broader acceptance of cryptocurrencies among both retail and institutional investors. The growing interest in Ethereum ETFs can be attributed to several factors, including Ethereum's recent upgrades aimed at improving scalability and reducing transaction costs. These enhancements have made Ethereum more appealing for various applications, particularly in decentralized finance and non-fungible tokens, further solidifying its position in the market. The impact of this record-breaking investment is far-reaching. It not only signals a pivotal shift in institutional investment strategies, but also highlights a growing preference for Ethereum over Bitcoin, a trend that could reshape the competitive landscape of cryptocurrencies. Analysts suggest that this may lead to increased regulatory scrutiny as the market matures, prompting discussions about the need for clearer guidelines. Furthermore, the influx of capital into Ethereum ETFs may stimulate innovation within the blockchain sector, potentially leading to new projects and applications. Looking ahead, the momentum generated by this investment surge could set the stage for further growth in the cryptocurrency market. As institutional interest continues to rise, we may witness a more diversified landscape where Ethereum and other altcoins gain traction alongside Bitcoin. Investors are keenly observing how this evolving dynamic will influence market conditions in the coming months, particularly as technological advancements and regulatory developments unfold. The cryptocurrency landscape could be on the brink of a transformative era, reshaping the future of digital finance. As Ethereum takes center stage as the institutional favorite, what implications does this have for Bitcoin's future? Share your thoughts in the comments, And don't forget to subscribe for daily deep dives into the latest stories.